Hello everyone, welcome back to the channel of UL classes. I hope you all are studying well for your TY BCom exams. Now, last two live sessions we have already started with amalgamation chapter. So, first session we covered with the entries, accounting entries in the books of transferor company. Yesterday's session I took up with question, MS University's question, where we solved the accounting entirely in the books of X Limited, and I gave you the task to solve on your own for Y Limited. Now, today I am going to take the most important topic in this chapter, but easy topic, which is only purchase consideration, finding of only purchase consideration. Now, if you all would have seen my or watched my session where I explained you which questions or topics you must prepare from exclusively question 1 point of view, 10 marks, 2.5 marks question. I told you that in that question, amalgamation is compulsory. You don't have any option. For 2.5 marks, what they are going to ask you is compulsorily a question on amalgamation. I have given you the guidance. You can see that video lecture. Link is also included in the description. Tips and guidance for question 1's preparation. So what other theoretical topics you may prepare. But exclusively 99% chances are there that you'll be asked a question to find the amount of purchase consideration. So in today's session, I'll be explaining you which are the different methods of purchase consideration. And from 2.5 marks point of view, exclusively from 2.5 marks point of view, particularly for question 1, which short questions of purchase consideration can be asked. 3 such short questions I'll be solving in today's session. Let's start with the thing. Very first of all, we have already seen what is the meaning of purchase consideration. We have already seen amount payable by the transferee company to the shareholders of transferor company. If you all remember this, I made you highlight important earlier, particularly that whatever amount is going to be paid to the shareholders, you can see in this first session what we had done. Over here, I made you mark this important, that particularly the amount payable to the shareholders. Okay, I discussed in this session that if any amount is going to be paid to debenture holders, if you're paying for liquidation expenses, those things won't be included in purchase consideration. So meaning of purchase consideration we have already seen in the first session. What I'm going to discuss today are the methods of purchase consideration. So all of you can write them. Okay, methods of purchase consideration. Now see, there are total 4 methods of purchase consideration. Okay, total there are 4 methods of purchase consideration. All of them I'll be discussing today. The first one is lump sum. Now lump sum method means in this method the purchase consideration amount will be directly given to you, and how the payment is to be done, that will also be directly given to you. In short, everything will be given. We don't have to make any workings. We don't have to find anything. Like the question we solved yesterday. All of you can see in the question what we solved yesterday over here. It was given to you the consideration agreed in the books of X Limited was 20 lakhs, Y Limited was 10 lakhs. So what is this 20 lakhs lump sum purchase consideration? Amount directly given to you. What is this 10 lakhs lump sum purchase consideration? Amount directly given to you. So basically in this method, nothing is to be obtained. Amount of purchase consideration will be directly given. And so this kind of question, they cannot ask you for 2.5 marks. Obviously, they cannot ask you a question where they only give you the answer. So they will generally ask you a question on any of the other 3 methods. Lump sum method can come in a long question like we did yesterday. Okay. Second method of purchase consideration is net asset method. Now, net asset method means how will you find the amount of purchase consideration? First of all, as the name itself suggests, what do you understand by the word net assets? Assets minus liabilities. Okay, what do you understand by the word net assets? Assets minus liabilities. From this itself, we derive how to calculate purchase consideration. Okay, we'll take it as agreed value of assets taken over so assets minus liabilities. But which value of assets? Not the book value, not the value which is given in the balance sheet. We'll take agreed value of assets taken over. So if A Limited acquires B Limited and B Limited's machinery in balance sheet is 10 lakh, but A Limited has agreed to take it at 9 lakh, then in finding purchase consideration, we will take it at rupees 9 lakhs. Okay, so agreed value of assets taken over minus agreed value of liabilities taken over. This will give you the amount of purchase consideration. Plus, if given in the question, you may further add any amount for goodwill. If given, otherwise, simply the above itself will become the amount of purchase consideration. Okay, so this is how you'll find the purchase consideration if the question is asked by net assets method. Agreed value of assets taken over minus agreed value of liabilities taken over. And if obviously agreed values are not given, then you take book values, values given in the balance sheet itself. But in case if agreed values are given, then you'll take the same. Now, third method of purchase consideration is net payment method. Now, this one is very important from exam point of view. For 2.5 marks, generally they would ask you a question of this third method, net payment method, or the fourth one, which we will see. Net payment method means what will be given to you is modes of payment. Different modes of payment will be given. Means it will be given to you that so much amount is paid in the form of equity shares, so much amount is paid in the form of preference shares, so much is paid in cash, and so much is paid in even debentures. I told you in the first session, you are giving debentures to shareholders, then you'll include in purchase consideration. So total of all those payments will be the amount of purchase consideration as per net payment method. Okay. Now here what will be complicated is the language. It is not so simple. Add the payment of cash, equity, preference, debentures, and you get the amount. Complicated over here will be the language. They'll mention something like for 2 equity shares of A Limited, 5 shares of B Limited are given. So we have to establish that ratio, connection, and then we have to work out how many shares are given, at what value they are given, and then find the amount of purchase consideration. So what will be important point over here is the language of the question, which we will see in today's session, one of the questions. Okay. And the last one is intrinsic value method. This can also be asked in exams. It has been asked in recent exams for 2.5 marks. Now, intrinsic value means book value of the share, the value from the balance sheet. So, intrinsic value of shares you would have studied in last year, second year BCom, valuation of shares chapter. Okay, in valuation of shares chapter, you would have studied net asset method, you would have studied yield method, and you would have studied even intrinsic value method, price to earning ratio method. So intrinsic value of shares, you don't have to find, it will be directly given. You don't have to find, the intrinsic value of shares will be generally directly given. What we are supposed to do is, see in net payment method, I told you the ratio language will be important. That ratio for 2 shares of A Limited, 5 shares of B Limited will be given. How is that ratio decided between the two companies? With the help of intrinsic value. Suppose the value of one company's shares is 20 rupees, A Limited, and value of B Limited's shares is 100 rupees. Now, because B Limited is taken over by A Limited, if A Limited gives, see, A Limited's shares value is 20. B Limited's shares value is 100. Now, if A Limited is giving its shares to B Limited, will they have to give 5 shares or not? Because one share of A company which B Limited will get will have value of only 20 rupees. So if they give 5 shares, then they will get their amount of 100 rupees. So that ratio for every 1 share of B Limited, 5 shares of A Limited should be given is actually derived using intrinsic value. Okay. Now here I'll be giving you one very easy trick. Okay, in intrinsic value, I'll be giving you one very easy trick. What you do is find the ratio of shares of 2 companies. This is very easy trick, all of you mind well. Nowhere else you'll find this particular trick. Find the ratio of shares of 2 companies and then what you do is reverse it. Reverse the ratio. Means, for example, if suppose A Limited, B Limited, intrinsic value of shares of A Limited is 30 rupees, intrinsic value of shares of B Limited is 50 rupees. Okay, this is intrinsic value of A Limited shares. This is intrinsic value of B Limited shares. Now, what did I tell you? Find the ratio of share of 2 companies. Find the ratio here. 30 and 50 is in the ratio of 3:5. Did you all understand that? And then what did I tell you is simply reverse it. Okay, what did I tell you here is simply reverse it. So what you'll do here is reverse this ratio. Means make it 5:3. What we will do? For every 5 shares of B company, for every 5 shares of B company, we will give 3 shares of A company. Why will we do it? So understand it. Now, for every 5 shares, sorry, reverse the ratio means it will become 3:5. I'm sorry. For every 3 shares of B company, give 5 shares of A company. This is what we will do here. Okay. Now, why we will do understand this way? What will be the value of 3 shares of B company? 50 into 3, 150. And we will give them 5 shares of A company. What will be the value of 5 shares of A company? 30 into 5, 150. Will they get equal value of shares or not? Yes. So that net payment method, the ratio which is obtained for every 2 shares give 3 shares, for every 4 shares give 1 share, how that ratio is actually derived using the intrinsic value method. So you people remember this trick. It will really help you a lot in exams and you'll see that just now when we solve one of the questions today. Okay, what you do is for both the companies intrinsic value of shares, you obtain a particular ratio and swipe it. Simply reverse the ratio to find how many shares must be given to the other. So this is the way we can solve questions for 2.5 marks. Now for particularly 2.5 marks, as I said to you, third and fourth method is expected. So these 2 methods short questions I'll be solving in today's session. Let's start with net payment methods questions. Okay. So first I am solving with net payments methods questions. Okay, this I hope is visible on the screen easily. Right. Now, this question, all of you can take a screenshot before we start solving it. So you can even have the question later on when you see the solution. See, the question is Relicon Limited. Okay, this is a question on net payment method as that is expected for 2.5 marks. So that is what we are doing over here. Relicon Limited took over the business of Elegant Limited. Now see here, Relicon Limited took over the business of Elegant Limited. Okay, means we can say that Relicon Limited is the purchasing company, that is transferee company, and we can say that Elegant Limited will go into liquidation, so that is the transferor company. Relicon is the buying company, transferring company. Elegant is the selling company, transferor company. And agreed to issue 1.5 equity shares of 10 each. 5 paid up is important. At a premium of 2 per share is also important. Against each equity share of Elegant Limited. 1.5 shares of Relicon will be given. Okay, 1.5 shares of Relicon will be given against each share of Elegant Limited. Okay, means we can make a ratio over here. What ratio we can make? This is net payment method of purchase consideration. Okay, this is called net payment method of purchase consideration. The mode of payment is given over here. What ratio we can make? You all remember this way. First take the second part, then second take the first part. All of you repeat. First take the second part, second take the first part. Means if I take first the second part, what is the second part? Second part is for each share of Elegant Limited. This you take first. Second part you always take first. Elegant Limited. For each share means for one share. Okay, for each share means for one share of Elegant Limited. They will give you, now you take second part, 1.5 equity shares of Relicon Limited. This is the ratio of exchange. And how is this ratio obtained? By intrinsic value method, I told you. How do they decide that for one share of Elegant, 1.5 of Relicon must be given? Maybe intrinsic value of Elegant shares is more. So that's why they have to receive more in terms of value. So Relicon Limited, they give 1.5 shares, as I explained you just now, right? So particularly Elegant Limited's one shares, second part you take first. Okay, this each share will get 1.5 shares of Relicon Limited. Now read the next sentence. The existing share capital of transferor company on date of, transferor company means which company? Transferor company means which company? Elegant Limited. Over here I made you mark it as transferor company. The existing share capital of transferor company on date of acquisition was 22,500 shares of 10 each. In Elegant there are presently how many shares? 22,500 shares of 10 each. So how many shares of Relicon will be given? For one share, 1.5 equity share will be given. So for 22,500 shares, how many shares will be given? 22,500 into 1.5 divided by 1. Okay, 22,500 into 1.5. Now if you do 22,500 into 1.5, then 22,500 plus 11,250. So that will be coming to 33,750. These many shares. Okay, these many shares of Relicon Limited will be given. Now what will be the purchase consideration? Here I made you further underline. The shares are of 10 each, but they'll be given at 5 paid up value. And they'll be given at a premium of rupees 2 each. So 33,750 equity shares will be given at the rate of rupees 5. That will be equal to 33,750 into 5. We will do it. Okay, 33,750 into 5. Just 1 minute. That will be equal to 168,750. And same 33,750 shares, 2 rupees will be premium. So 33,750 is double is 67,500. That much will be the amount of premium. Now 168,750 plus 67,500. So 2,36,250. This will be the amount of purchase consideration. For 2.5 marks, this can be asked. Okay. So net payment method, I hope everyone is clear with this. As I said to you, modes of payment will be given. Here in this question only one mode of payment is given. And what is that mode of payment given to you? Equity shares. And for that ratio is given. That for one share of Elegant, you get 1.5 shares of Relicon. Using that ratio, we find out how many shares of Relicon will be given. And then in the question, it is mentioned that the shares will be 5 paid up premium of rupees 2. So the total value in terms of shares, what you are going to get is 2,36,250. Right? Now, one similar question we will solve again of net payment method. Then I'll take up with intrinsic value method as well. So now this is one more question of purchase consideration. This previous question what we solved was asked in December 2019 exams. This question has been asked in December 2019 exams for 2.5 marks. And the question which we are solving right now, okay, that is college examples question. That has not been asked in exams so far, but it is done in college in the current year. Okay, this example is done in college in the current year. Look at the question. A Limited took over B Limited and agreed to issue 3 equity shares of rupees 10 each at rupees 15 for every 4 preference shares of B Limited. Now, this is important to be noted. You will be giving to preference shareholders, but what you will be giving them is equity shares. In the new company, you will be giving to preference shareholders, but what you will be giving the preference shareholders in the new company is equity shares. Means here, A Limited, okay, took over B Limited. A Limited is the purchasing company, that is transferring company. B Limited is going into liquidation, that is the transferor company. What will A be giving to the preference shareholders of B Limited? Equity shares. Second sentence, to issue 4 preference shares of 10 each at rupees 17, value will be 17, for every 5 equity shares of B Limited. So they have completely swiped it off. Preference shareholders of B Limited will get equity shares of A Limited, and equity shares of B Limited will get preference shares of A Limited. Completely swiped it off. And value is also given, that is 17 rupees and 15 rupees. And further, to pay rupees 3 per equity share, and similar amount means same rupees 3. Similar amount means same rupees 3 per preference share of B Limited. So both equity shareholders as well as preference shareholders will further get second mode of payment. What is the second mode of payment? Cash. How much cash each of them will get? 3 per share. Now calculate purchase consideration for amalgamation, assuming that B Limited, now B Limited over here has 1 lakh equity shares and also they have 50,000 preference shares. So as I said to you, this is also net payment method. How to do it? 2 different modes of payment are given. Okay, if we solve it, again all of you can take a screenshot if you want for this, and then you can solve it. If we go by net payment method, then there are 2 modes of payment. Okay, in fact there are 3 modes of payment. One is equity shares, second is preference shares, third is cash. And all these 3 modes of payment are going to whom? Shareholders only. Okay, so first we take up with the mode of payment in the form of equity shares. Now equity shares we are giving to whom? As per the first information, equity shares we are giving to preference shareholders. I already discussed this with you just now. Okay, you all can see over here again. Equity shares will be given to preference shareholders. So let us make the ratio. Now what did I tell you in the previous question? When you make a ratio, what will you do? Take the second information first. Means take this second information first. What is that? B Limited, A Limited. What is the second information? 4 preference shares. For 4 preference shares of B Limited. Second information, 4 preference shares of B Limited. 3 equity shares will be given of A Limited. Okay, so this is the mode of payment is equity shares. We are giving to preference shareholders, but what are we giving to the preference shareholders? Equity shares. Now see the last sentence. How many preference shares are there in B Limited? 50,000. For 4 preference shares, we will give 3 equity shares of A Limited. So for 50,000 preference shares, we'll give how many? 50,000 multiplied by 3 divided by 4. Now 50,000 into 3 is 1,50,000. And then 1,50,000 divided by 4. So 1,50,000 divided by 4. 37,500. How many preference shares will be given? 37. Sorry, equity shares will be given 37,500. And what will be the value of these 37,500 shares? See here, all of you, first information, 15 rupees. Means 10 rupees face value, 5 rupees premium. Okay. So what will be the face value over here? You will mention 37,500 equity shares at the rate of rupees 10 face value. So what amount will go to share capital is 3,75,000. And same 37,500 equity shares, 7 rupees will be treated as premium. So what will go to security premium account will be 37,500 into 7. That will be equal to 2,62,500. Means total payment what will be done to the preference shareholders in the form of equity shares will be 3 lakhs plus 2 lakhs, 5 and then 570 and 60. So 6,37,500. This will be the total payment done to the preference shareholders in the form of equity shares. Now second payment we go for preference shareholders. See the second information what is given to you. To issue, okay, preference shares payment. To issue 4 preference shares of 10 each at rupees 17 for 5 equity shares of B Limited. Again, as I said to you, second information will take first. What is the second information? B Limited, A Limited. Okay, what is the second information? For every 5 equity shares of B Limited, for every 5 equity shares of B Limited, what are we going to give? 4 preference shares of A Limited. Okay, equity shareholders we are going to pay in terms of preference shares. Now see the last sentence. How many equity shares are there in the B Limited's books? 1 lakh equity shares are there. So for 1 lakh equity shares, okay, for 1 lakh equity shares, they'll get how many preference shares in the books of A Limited? So 1 lakh into 4, okay, and then divided by 5. That is 80,000. So how many equity shares will be given? Sorry, preference shares will be given 80,000. And what is its value over here? 17 rupees. So again 10 rupees face value and 7 rupees premium. We'll say 80,000 preference shares of rupees 10 face value. So in terms of preference share capital, what amount will go? 8 lakhs. Okay. And okay, I have done one mistake. In case of equity shares, the value was 15 rupees. So this won't be multiplied by 7. This will be multiplied with 5. Okay, so that amount will not be 2,62,500. 37,500 into 5. That will be equal to 1,87,500. So 3,75,000 plus 187,500. That will come to 5,62,500. Right? And here the premium is 7. So 80,000 same preference shares. Premium will be 7 rupees. So 80,000 into 7, 5,60,000. 13,60,000 will be the total payment done to whom? Equity shareholders, but in the form of preference shares. Okay, so net payment method, 3 modes of payment that are equity shares, preference shares, and the third last mode of payment is cash. Okay, the third last mode of payment here is cash. Now, how much is paid in the form of cash? If you all see over here, third information it is given to you. 3 rupees per equity share and similar amount 3 rupees per preference shares of B Limited. So this 1 lakh equity shares will also get 3 rupees, 50,000 preference shares will also get 3 rupees. Okay, 1 lakh equity shares will get 3 rupees, that is 3 lakhs, and 50,000 preference shares will also get 3 rupees, that is 1,50,000. So total payment that will go in terms of cash is 4,50,000. Now if you add the three amounts, this A amount which is going to go in terms of equity shares, this B amount this is going to go in terms of preference shares, and C amount which will go in terms of cash, then total purchase consideration will be equal to 5,62,500 plus this 5,62,500 plus 13,60,000 plus this 4,50,000. Okay, so 13, 17, 22, 23 lakh 10,000, 23 lakh 72,500. Total payment that will be done will be 23 lakh 72,500. This is the purchase consideration. So these type of questions can be asked for 2.5 marks. Net payment method. Now intrinsic value method, last one more type of question we'll take up in today's session. Okay. Let's take up with this particular question. Now this was asked in the recent most exams, that is February 2023. February 2023, this was asked for 2.5 marks. So intrinsic value is the most expected in the current year's exams also because in the short examples done in college also, majority questions what they have taken up are of intrinsic value method. So most expected in your exams. Let us understand this question. Okay, as I told you, the trick which I have given you is find the ratio of intrinsic value and swipe it. Let's see. S Limited took over the business of Y Limited. Now S Limited again is the buying company, so that is the transferee company, and Y Limited is going into liquidation, so that is transferor company. Okay. Total number of equity shares of and preference shares of Y Limited. Y Limited means this, I am marking it in blue so that it is clear to you. Okay, you all can take screenshot also of the question if you want. Y Limited's equity shares and preference shares of 10 each were 30,000 and 8,000 respectively. Means you can say equity shares are 30,000 and you can say preference shares are 8,000. Okay, going further, preference shareholders of Y Limited would be discharged. Now preference shareholders of Y Limited would be discharged at 20% premium by issuing necessary number of shares of S Limited of rupees 10 each fully paid up. So let's first settle this. Okay, there is again intrinsic value method we are going to have, but preference shareholders will get what payment? Okay, preference shareholders will get what payment? They say they'll be discharged at a premium of 20%. Existing, there are 8,000 preference shares of 10 each. Existing, there are 8,000 preference shares of Y Limited of rupees 10 each. Means the value of preference shares is 8,000 into 10, 80,000. Okay, the value of preference shares is 80,000. Now they'll be discharged at a premium of 20%. Means here not security premium. Here premium of 20% means we will be paying them 20% more. That's it. Okay, security premium account is not to be created over here. So 20% more means 16,000 more we will be paying them. So we will be giving them how much? 96,000. And how are we going to give this 96,000 to them? By issuing necessary number of preference shares of S Limited of 10 each fully paid up. Means for this 96,000, we will be giving 96,000 divided by 10. 9,600 preference shares of rupees 10 each. Payment done will be 96,000, but 10 rupees face value, 9,600 preference shares will be given. No premium will be recorded, security premium will be recorded in the books of S Limited. Okay, so here when they say discharged at 20% premium, remember the word discharged. In long question also it will help you. Discharged at premium means you are paying them more. Discharged at discount means you are paying them less. But shares will be issued at face value only. Now going further, they say equity shareholders of Y Limited will be given necessary number of fully paid equity shares of S Limited based on their intrinsic value. Now here intrinsic value comes into force, which was, now see here, which was 150 rupees and 100 rupees of S Limited and Y Limited. Okay, S Limited and Y Limited. Now this is what I told you in the shortcut method, establish the ratio. So if you do the intrinsic value, how the equity shareholders are going to be made the payment, understand this. Equity shareholders. Okay, first of all, two companies are S Limited and Y Limited. Y Limited is basically the company to whom the shares are to be given, and then S Limited. Now what is Y Limited's intrinsic value? See here, Y Limited's intrinsic value is 100 rupees. Okay, Y Limited's intrinsic value of share is 100 rupees. And what is S Limited's intrinsic value of shares? 150 rupees. Now what did I tell you? First you people find the ratio. See here I explained you. Okay, first you find the ratio. Let's do the same over here. If we find the ratio of 100 and 150, then both are divisible by 50. What is 100 divided by 50? 2. What is 150 divided by 50? 3. 100 and 150 are in what ratio? 2:3. How did we get 2? 100 divided by 50. How did we get 3? 150 divided by 50. The ratio of two companies' shares is 2:3, intrinsic value. Now what did I tell you? After finding the ratio, you reverse it. Means this 3 and this 2. What does it mean? What does it mean? For every 3 shares of Y Limited, we will be given 2 shares of S Limited. This is the ratio which we obtain. For every 3 shares of Y Limited, because what will be the value of 3 shares of Y Limited? 100 into 3, 300. You will be given 2 shares of S Limited, 150 into 2, 300. So in terms of value, you will get same 300 rupees only. Because S Limited company's value is more, 150 rupees. So you will give only 2 shares. In terms of value, it will become 150 into 2, 300. Because Y Limited company's value is less, 100. So their 3 shares value, 100 into 3 is 300. So what ratio will be applied over here? For every 3 shares of Y Limited, give 2 shares of S Limited. This is a very simple trick I have given you. Find the ratio of intrinsic value of both the company's shares and reverse it. Okay. Now in this ratio, if we set the things, then see here in the beginning, how many equity shares are there? 30,000 equity shares are there in the books of Y Limited. So for 30,000 equity shares of Y Limited, how many shares of S Limited will be given? 30,000 into 2 divided by 3. Now 30,000 into 2 is 60,000, divided by 3 is 20,000. So how many shares you'll give? 20,000. And how would you give? They say it will be given necessary number of fully paid equity shares of S Limited. Fully paid equity shares of S Limited. Okay. That means what is the fully paid equity shares of S Limited? 10 rupees. So they will be given 10 rupees shares of this S Limited. 20,000 equity shares will be given of rupees 10 each. means in terms of fully paid value, it will be given 2 lakh. Now 2 lakhs will be given in the form of equity shares. 96,000 will be given to preference shareholders. So what will be the amount of purchase consideration? 96,000 plus 2 lakhs. The purchase consideration will be 2,96,000. Okay. So these questions are very important from 2.5 marks point of view. I will be putting the link. I'll put the link of these 3 questions, so you can download the soft copy of that and you can re-practice the same questions again. But most probably in question 1 for 2.5 marks, you'll get compulsorily these kind of short questions of purchase consideration. Now, 2 more sessions I'll be taking for amalgamation. In the next session tomorrow, I will be discussing with accounting entries in the books of transferee company. Transferor we have already done. So now we will be discussing with accounting in the books of transferee company. And there are 2 different methods to be followed in case of transferee company: pooling of interest and purchase. When to apply those methods, we'll see tomorrow. And then in the next to next session, I'll solve one question where we will do accounting in the books of transferee. So that'll be all for today. Wish you all best of luck. Keep studying well. Bye everyone.